All right, let's get started. Vegas, you there?
Yeah, I'm here.
Awesome.
Hey,
Welcome
Vegas.
back. Hey, there's you go.
Long time no speak. How are
Hi.
you?
I know. Good, thank you. How are you?
Happy to be back here with you guys.
Great. And thank you everyone for joining us on this after hours story trading. And Amazon definitely looks great. We could see that the tech giant did battle labor inflation amongst other factors. They did mention in the quarter earnings release that it would lift the annual membership for Prime to $139 from $119, and the monthly fee, if you pay monthly, will go from $12.99 to $14.99. And their vice president Jamil Ghani said that the increase reflects the heavy investment in new member benefits, in that in the last few years they've added more product selection available with fast, free, unlimited shipping with the Prime membership, and that they're giving a lot of exclusive deals, discounts, and a lot more high quality digital entertainment, including TV, movies, music, and books. And they said that they raised their Prime fees twice since launching the offering back in 2005, once in 2014 and once in 2018. So I think that, I don't think it's such a big deal. I mean, people love the convenience of Amazon. I mean, whenever I have used it, it's really just because I get the stuff so fast. It's never really been about, because I have a Prime membership. So good job to Amazon traders. And I think hopefully we'll see if that can help with the market, in terms of, we saw what Facebook did, a lot of red in the market and chop zone, and now we see Amazon, did well. So we'll see if that has any kind of effect in the market. Obviously tomorrow, it'll be interesting to see how that goes.
Well, that's what I love about you, Vegas, is when you talk about stocks, you really do story trading style. You're talking about catalysts, how it may impact fundamentals. Sentiment, I think you deal with sentiment too, but most of the other traders, most of the people on FinTwit, they're just looking at charts and numbers. And to me, it's infuriating. Like, I can't trade numbers. I'm trading companies. I have to understand the story behind the trade. So that's what we
Yeah,
try to do here. And last week, you just killed it on Apple. You had a great prediction. Igal was online playing the skeptic, and
he
you were like,
was.
do
He,
not bet against Apple, right? Do
yeah, because
not
he
bet
was telling
against
me about
Apple.
the headset. What do you call it? The AirPods.
Right, the
The
clips
Um,
they got
wearables.
on those.
the
Yeah.
wearables, and I was like, that's no big deal. You're like, oh, but they're on sale. I'm like, who cares? Because it was like I was, envisioning. And the thing is too, like, we can go and talk about Apple while we're at it, but I think one of the things to mention with Apple is obviously it's proven yet again solid financials, and the stock obviously had high post earnings against a 7% after posting solid results. And obviously, there was, we had a tech sell off in general, but the stock did really well. And I think that one of the things I noticed here with Apple too is that they not only had a blowout quarterly results, they did have a revenue of $123.9 billion and a net profit of $34.6 billion. So it is significantly higher compared to the revenue in the same quarter a year ago. And the other thing too is their iPhone revenue was a whopping $71.6 billion. So it did beat the analyst expectations in all segments except for the iPad. So I don't know what's happening with the iPads. I don't really use it too much. I do use it, but not a lot. Um, but they did announce a dividend of 22 cents per share for the quarter. So if you're an investor who actually enjoys and appreciates dividend income, then I think you'll actually like Apple, and I think it's a great choice. 22 cents, it's not a lot, but it's still income. So even though they had like supply chain issues, this was Apple's biggest quarter ever. So this just goes to show you that the company has a lot of strength. Tim Cook and his leadership team is doing an amazing job. They have a very impressive line of products. And what I like about Apple, and I should say love about Apple, but although I don't love everything about the products because I find some of them so complicated to use, because I was on Android and I switched to Apple last year. I mean, I had Apple, just so you know, years and years ago, and then I switched to Android, and I had not used Apple in honestly 10 years in terms of like a phone, an iPhone. And then I switched back because my phone broke and I wanted something small. And then they had the iPhone mini. So I thought, oh, I'll get Apple. And then it was a disaster using the phone, had so much problems. And nothing to do with Apple itself, just like me getting used to the phone, Apple phone again. But anyhow, I got used to it. But the thing is, Apple has an impressive lineup and they're so innovating and they're growing. And so the thing is to keep in mind, and I know you love this information, Ben, is to know that the company ended the quarter with a cash balance of $203 billion and a total of they have debt though of 123 billion. So they still have a very solid business. They continue to generate strong cash flow, and they also reward the shareholders. And I also read that they have 22 new products for 2022. A slew of iPads and a slew of other things, but 22 new products that they're going to be hopefully releasing throughout the year. So they do have a lot of analyst increases. Brian White from Monas Crespi, he is looking at about 199. Katie Huberty from Morgan Stanley says she thinks Apple's worth 210 with an overrate on the stock. And Daniel Ives, who's very common from Wedbush, he says he's targeting 200 as well. And another analyst, Krish Sankar from Cohen, he has a target as well of 200 with an outperform. And Sydney Ho from Deutsche Bank said 210 with a buy rating. And also very impressed with the quarterly results as well as what Sydney said from Deutsche Bank. So all in all, if you guys like safe stocks, those of you listening, or like something, long term, you don't have to babysit, you should really look at Apple. It has massive growth potential, very strong company. They pay dividends, which if you like income, we'll look at Apple. Obviously, do your own due diligence. Nothing we talk is financial advice. Go speak to a licensed advisor for that. But just sharing why it's a good investment. And, we know that probably in the coming months, don't be surprised to see Apple head to 200. And actually, I think it's going to go above 200. So I think today is February 3rd. So I think before the next earnings call, Apple will be already past $200. That's my forecast on Apple.
Great, thanks. I mean, it's really starting to look like a value company. Those of you who are part of the story trading community, traditionally we focus on micro caps. And in the past several months, we've shifted our focus to larger cap companies. A lot of that having to do with the concern of inflation. Really could be a bad environment for microcaps. So we're shifting. We've had a bunch of presentations on multi-billion-dollar companies, but now I'm starting to think we should have a couple presentations here or there in our VIP community on trillion-dollar companies. Because some of these are starting to really look like value plays. It's these numbers are absolutely mind-blowing and hard to understand and fathom. I mean, personally, I've missed the ride on a lot of these large caps because they always look very overvalued. But at this point, I mean, some of these trillion-dollar companies look like they could be better deals than some of these micro caps that we've traditionally done research on. So I appreciate you, Vegas, exposing the story trading community to larger cap companies. Maybe at some point we'll invite you onto one of our Zooms. We do great. We love our VIP Zoom sessions. That's when we really learn in depth about these companies.
Yeah, I love the VIP Zooms.
So, Igal, did you have any comments on Apple? I do have a couple follow-up questions for you, Vegas, but just wanted to let Igal chime in for a second.
The only thing I wanted to add on Apple is, first of all, you had a great call last week. Second of all, I'm just shocked at those numbers based on what they said that they're going to be scaling back iPhone 13 production last quarter. just because they can't get enough chips. So even with that, they blew out the number. So it's extremely, extremely impressive for me.
So I wanted to ask you the impact on the market. We saw Apple basically single-handedly turn around that downtrend last week, and there was a short covering rally in tech stocks for like 3 days. Do you think we can get the same thing with Amazon here, going from a low of 2,700 to now 3,300 in after hours right now? That's a huge move. We see some other tech stocks up 40-45% in after hours right now. What are your thoughts on how this is going to impact the market, Vegas?
Well, with regards to Amazon, I think it'll impact the market in a positive way. I think I was really surprised that someone like Facebook, if you actually really think about Facebook, I was talking about that today with my room, and I was like, what do you even do with Facebook? I go, at least Apple, you have products. It has computers. Even if you buy computers, like I know people that have older models of iPads or phones or computers, they buy it, they don't want it. A couple years later, they sell it, and there's always a buyer to buy like a used Apple product. I thought with Facebook, forget that they make a lot of their money obviously from ad revenue, but let's just assume you don't really have a business. You just you're on the Facebook, so it's just a social app. Like you personally, like what's in it for you, besides wasting time talking to people on social apps when you can just like call people and talk to them. I don't know, like spending on time on Facebook, I don't know what value that gives me as a user, but so I just thought, how can something like Facebook just affect the market so much? It was just ridiculous, I thought. And I actually kind of thought, wow, like it's like manipulation, but I just thought it was just crazy. So I actually think, and the whole day, I was watching Apple, and I said to myself, interesting how a lot of stocks took a big hit with the Facebook not doing well, or the guidance was bad. And, I'm watching companies like Apple just kind of hanging around the ones like mid 170s. And I said, I don't really think that's doing anything anyways. And, at one time it did break support a little bit. At one point in the late in the afternoon, but then everything was kind of choppy, and then it just reversed back up as we had the Amazon numbers. So to answer your question, I think it's a good sign for the market. I think we'll see some, potentially a green day tomorrow. So I'd like to see that. That's going to help reinstill some, faith in the stock market. But Amazon, super powerful company. I mean, I think it's obviously more powerful than Facebook. So if Facebook can bring down the market like that, then I think Amazon can do the opposite and push the market up.
Well, Amazon is up 22% from today's lows. Snapchat is up on earnings 54% from today's lows. I mean, that's mind blowing. I want to bring up the possibility, though, and I talked about this on, maybe I didn't, on Wolf Financial Spaces. Maybe.
Wow, Snap's crazy, yeah.
Yeah, 54%. That is insane. But,
Mm-hmm.
some of the biggest rallies you have, like what we're seeing, are short covering rallies in bear markets. I noted this last week when we were up huge after Apple. Did I lose you guys? No. Okay, I noted it last week, and I actually added to my hedge in the last few days, which worked out for today. But I want to talk about that a little bit, because the only thing really holding up the market are these big caps like Microsoft, Amazon, Apple, AMD crushing earnings, but the breadth is not there. Stocks are continuing to get killed that are not these mega caps. And I want to maybe ask about, y'all, I'll ask, you might have more insight into this as well, but we didn't see the COVID stimulus really die down fully until the Q4, really the end of Q4, where the child credit was gone. I think that happened even through December. So people are getting paid $300-400 per month per kid, directly deposited into their bank accounts if you qualified. There's unemployment benefits really started running out also the last few months. And now just in the last month and a half, there's an interest rate fears. So people may start, being more careful how they spend their money. or taking out loans, whatever it is. And I'm kind of worried that could this be the last great quarter for mega caps? Could Amazon, Apple, and Microsoft, can these companies maybe start disappointing the balance of the year? And is it possible all the good news is out of the way and this is just a short covering rally in a bear market we're going to have this year?
So let me just touch base on where we've been in January and where I think the market's going right now. I mean, obviously these are all personal opinions, but essentially, whenever you're in a bull market and then there's confirmation or even suspicion of interest rates being risen, the market freaks out because they don't know how strong the interest rate's going to be, how high it's going to do, how high they're going to go, and how it's going to affect consumer demand. As soon as we had the Fed speak last week and this Fed gave more uncertainty, I think that just spooked investors even further. But once they were able to digest the information and they were able to understand that the Fed is they're not so decided right now how high they're going to be pushing rates, but they're still going to be very conservative. They're not just going to start pushing rates up significantly. I think that's really what allied a lot of investors' fears, and that's really where we saw the reversal on Friday. So since Friday, we went straight up until today, where the Facebook earnings happened, and I think Facebook today was just an excuse for people to sell off because they're still very jittery. They saw the market go up for 4 straight days, and then Facebook came out with disappointing earnings. And just touching up on Facebook for a second, Vegas, Facebook is not just a social media company. They deal with hundreds of billions of dollars of advertising of the largest companies in the world. So when people see Facebook missing, they don't think it's just Facebook. They think that these companies are missing in advertising revenue, they're missing in sales, and that's really why the market would go down with a company like Facebook. I mean, I think they were the 5th largest market cap company in the world. So there's a lot of that going on. Ben asked me offline today where I see the market going, and I don't know if it was today or yesterday. I said I think once the sell-off is done, we're going to start going back up. And I think once Amazon reported today, I think it's going to give investors a level of confidence to continue a multi-market day rally. I see this rally continuing. I don't see any pullback as of yet. Jobless claims came out again today. I didn't think it was too bad. So the only caveat here is I'm less worried about interest rates now for the rest of the year. However, when the market starts doing bad, retail investors still get scared and they start pulling back purchases. And it starts becoming a self-fulfilling prophecy because the market starts freaking out. Retail investors lose a lot of their wealth. They start pulling back on purchases. And then the market sees that retail investors are freaking out. And it starts a domino effect of things going down. So I don't think we're out of the woods yet. I do think we're going to still have significant volatility ahead. But I'm not too worried about the market towards the second half of the year. I think things are going to settle down. Prices are going to start stabilizing because shipping is becoming more consistent. Supply constraints are opening up again. And I think we're getting to that point that we're seeing increased visibility of the future from major companies. And I think that's going to calm the markets. I don't think that's going to happen overnight. I still think we're going to have probably another 1 or 2 months of volatility ahead of us. But I think towards the second back of the year, we should be okay.
Vegas, what are your thoughts on that?
No, nothing more to add, really. I think, I'm in agreement with a lot of this commentary that he mentioned. And, I think with the Fed looking to raise rates and, I think, we can expect to always have volatility in the market and, always prepared for either, every day is a new day and you never know what, you might think, oh, tomorrow's going to be green and then there's pullback or some news or headlines. So always just prepared for whatever. But when you're investing, it's you look at things differently. But I'm just talking like if you're looking to day trade, always prepared to be on the right side of the fence.
Okay. Ben is ready for a huge bear market.
No, you guys are more optimistic than me. You guys really are. I mean, these inflation numbers we're seeing are like nothing we've ever experienced in our lifetimes. I was a little kid when the early 80s we had huge inflation and very high interest rates. So I'm concerned specifically about risk assets and microcap companies. I could definitely see a world in which you continue to have some inflation, and that benefits companies like the mega caps and Amazons, and asset valuations will go up for like an Amazon that have pricing power, right? They can raise their rates to $139, but access to capital, I think, is going to get more expensive for smaller companies. If inflation continues, discretionary spending that will disproportionately hit the smaller companies will be an issue. So I am like pretty bearish. A 17% hedge on my mostly microcap portfolio, and but it's difficult, right? Because I may be right about everything I'm saying, but the mega caps will keep on doing well, and my hedge might not work, right? So that's kind of my fears about this market, and I'm really not sold on it yet. I think the reason we pulled back was more technical. It was a 20 DMA resistance yesterday, and it was before the Facebook earnings. It was already having trouble with even after the Google report. The morning after the Google report, the market had a lot of trouble going over the 20 DMA. It looked like it was topping, already going down. So I think Facebook was just a convenient excuse. So I'm not sold on this. I think there's a possibility
I
the
agree
market.
completely, Ben. And I think the markets were jittery anyway, so they were looking for an excuse to sell off. But just on your point with small caps and micro caps, I don't personally see interest rates doubling from here. So they'll go from, right now a small business can access capital markets at 5-6%. Maybe by next year they'll be 7-8%. It's not gonna go up. Interest rates are not gonna fly so high that all of a sudden these smaller micro caps are not going to have access to capital. There's a ton of liquidity out there. There's a ton of capital out there. People are also sitting with money on the sidelines, ready to put it to work. Just look at the real estate market and everything else that's going on. So I don't think that inflation is going to start going out of control at this point. I'm actually seeing more positive numbers on inflation. Looking forward, obviously, in 3 months, not the retail inflation, but the cost inflation. So I think once we have that settled, we're going to start seeing more visibility in the future. I just think that, 2 weeks ago was very cloudy. And actually, after the Fed meeting, I felt a lot more comfortable because it looks like they know they're going to raise rates, but they're not going to be too aggressive, which, calmed my fears at least.
Well, if you're not going to get higher rates, I don't know. How do you print all of that money into the system and not get inflation? And I don't understand how the whole bond system works, the US Treasuries. So people are telling me, oh, they just can't raise interest rates. They have no choice because then they won't be able to pay back the debt or something like that. So there's also that, right? But if you're not going to raise rates, then you're stuck with inflation, which logically makes so much sense to me. With all this money supply, all this money printing, it's going to be one or the other. And again, that inflation might be great for the S&P 500, might be great for the Nasdaq, might be great for Amazon and Apple and Microsoft, but it could be a disaster for all the smaller companies. So
raising rates is not the issue. It's how fast the rates are raised and how high can they go. If they raise 3 times this year by 1/4 of a basis point, I don't think that's going to do anything to the market. It'll probably be positive for it because the economy is still strong.
But is that enough to address inflation, though?
I think a lot of the inflation has been transitory, just based on shipping and COVID, in terms of workers not being able to be at the ports and truckers not being able to deliver. Now that the world economy is opening back up, I mean, the UK opened up restrictions fully. Israel fully opened up restrictions for vaccinated. A lot of that is going to go away, and we're going to start seeing that flow through eventually. It's not going to be right away. I personally think it's going to take another 12 to 24 months for pricing to go back to normal. But I think we should start seeing some slowdown in inflation in the coming months. And just so you see, I mean, I spoke to a friend today. They import about 4,000 containers a year. And he said about 700 containers that they had ready to come in for the holiday season actually just arrived in January. So they have a lot of excess inventory, and they're going to start clearing out that inventory because they don't want to hold on to that. So you actually may see some pricing pressure downwards for the first time in a long time because of all these shipping issues that were going on. So just to understand the complete picture, what you're seeing now in inflation on a retail level, we've been seeing that back 6 months before on the manufacturing level. And now at the manufacturing level, we're starting to see inflation stabilize or even go down a little bit.
Okay. Thank you for that commentary. I want to go back to Facebook a second because I have a colleague in they're in the advertising industry. It's an ad agency. So they have a lot of experience. They have hundreds of clients and they advertise on all the different platforms. And they were not surprised at all when, I said, did you see Facebook down 25%? They're like, yeah, of course. They're like, our returns on Facebook have dramatically declined the last several months because of the Apple policy changes. And they talked about this yesterday. Yeah, there's the competition from TikTok, but they also mentioned the headwinds from the Apple policy changes, which are privacy changes in terms of tracking people. So they're seeing the return on investment for their clients go dramatically down on Facebook, and some of that money going more into Google. So that could be a very specific company issue over there at Facebook. Just wanted to throw that out there.
Yeah, we're seeing the same thing with Facebook. I mean, it's just much harder to track. So the numbers that are coming out, if we were getting originally a 10 ROI, we're not able to see that because of the privacy blocker. So now we're effectively, let's say we're seeing a 4 ROI, it doesn't mean that our actual conversions are lower. It just means a lot more people are blocking and keeping their privacy up. So we're not able to track to see what actually converts from the ads. So I could see we've reduced our social spend as well last quarter.
Wow, fascinating. Vegas, Snap, we didn't get too much into it. It's still up 55, 56% from the low of the day. Just mind-blowing. I don't follow Snapchat at all. What are your thoughts on
Yeah, I'm
on
really
those
impressed.
segments?
I am very impressed with Snapchat. I will say that they did amazing because the daily active users increased 20% year over year to 319 million. And their fourth quarter revenue was up 42%, and the full year revenue increased 64% year over year. So it's been the first quarter, by the way, this is why, in my opinion, it's going up significantly. This is the first quarter of positive net income as a public company and first full year of positive operating cash flow and free cash flow. So that's huge. Okay.
Wow.
And so when you have that information as a public company, that is like, hello, look at me. And Evan Spiegel, as we know, super smart. And, he said that it's been an exciting year for Snap, significant progress with the company, and that the strength of the core business has really enabled them to accelerate their investments into augmented reality and really transforming the way that Snapchat community experiences the world through, as you know, they're a camera company, and the revenue is just amazing. And if you actually take a look, their free cash flow was $161 million in Q4 compared to 69 in the prior year. So as a loss. So this is just incredible to know. And they have invested, they said they did invest 18 New Year's Eve lenses, which generated more than 7 billion impressions. The lens creators can now include a call to action link with the lens, making it easier for lens creators to grow their business. They also partnered with Great Barrier Reef Foundation to launch what they call a new water segmentation lens, which can show a virtual reconstruction of the Great Barrier Reef and its ongoing degradation to inspire people to actually protect the world's delicate reef system. And they also have done many other things. They have invested in their content offerings. They've added more than 160 new international Discover channels with several partners. They also partnered with Kim Kardashian and Kris Jenner. And what they did is they're going to launch what's called the Kindness Spotlight Challenge, which is generating the most submissions for a challenge to date. And they also partnered with Mariah Carey with her Christmas song that they did with the All I Want for Christmas Is You through the sounds of Snapchat. And that was another Spotlight Challenge. So they did a lot of stuff. And the other thing, too, is that they have expanded their offerings for advertisers as well. So they have, a catalog that's called the Powered Shopping Lens, which provides real-time results for brands on SKU level augmented. And they also introduced a new augmented reality try-on shopping interface for Snapchatters. And then MAC Cosmetics utilizes their self-service lens called the Web Builder tool, which is now available to a lot of beauty brands to build several augmented reality try-on makeup lenses. And then they also, I think, launched a catalog also with powered shopping lenses as well. I mean, they've just done so much. So the thing is, the financial guidance is key, and the forward-looking statements. They did mention as well that revenue is estimated between 1,030 million and 1,080 million, and that they're going to have the conference call, which is starting right now, actually. So that is amazing news. And I think the key here is that the first time in history, the company's history, that they have had a first quarter of positive net income and also a full year of positive operating cash flow. And that is huge. And as you know, free cash flow is king for any company. And I think that's why also Amazon did really well too. So much free cash flow on Amazon.
Wow, awesome recap. So what would he do here? Snap at $38.
Yeah.
Could you advise buying it right here?
Well, you know what? It's kind of, you kind of feel, I feel like you're buying the top. So have to watch and see. I mean, we know Snapchat was worth a lot more money at one time. I used to have Snapchat when it was back in the low 20s at one time, and sold it when it was really high. I don't have any shares of Snap anymore. It was one of those like, oh my God, I'm never selling, but I had to because the stock was pulling back, and I had to, couldn't leave all that money on the table, even though I never sold the top. But going back, I mean, look, it's still a good price. I mean, we know the stock in the last 52 weeks was $83.34. And I think that there's an opportunity. I wouldn't say buy this top. I mean, there's going to be an opportunity, obviously, for this to probably pull back. But, we're obviously going to see a lot of analyst upgrades, I think, tomorrow as well as a result of this. So I think it is one to watch. I mean, there's nothing, I don't think there's ever anything wrong with like a starter position, but I never like to buy my full position. So if I was to buy, let's just say 100 shares of a company, I'm not going to buy 100 shares right now at this price. I may buy like a few. And if I was going to go investing, I'd buy, and then if there's any pullbacks, I like to add to the position on the pullbacks because I know I'm investing in a good company. So, you don't want to get the full size at the top. You want to see if there's any kind of opportunities for pullbacks, but I'm sure we'll see upgrades tomorrow. So, this could also have a gap up tomorrow. So definitely it's up to you how you want to strategize your entry. But yeah, I think it's going to be interesting tomorrow how this one performs. I'm going to be very impressed to see a lot of analyst upgrades for sure.
Awesome. Great. Thanks for that summary on Snap. You're so knowledgeable on that. Y'all, do you have any thoughts?
Yeah, I just had a quick question. How are you positioning Snap in terms of a social media play versus a Facebook that owns Instagram and WhatsApp as well as TikTok, which seems to be on fire? I mean, in my opinion, Snap looks like it's been left for dead, and that's why it's been doing so well. I mean, after hours, because people thought that they just can't deliver anymore. How do you see that longer term of positioning versus the other social media companies?
You know what? Hard to say. Because I am not a user of Snapchat either. I mean, I don't have time for those apps. I don't even know, it's just crazy. But I think they have a lot of, revenue coming. They have a lot of partnerships coming. They have a lot of product and partner in the ecosystem. I think they're going to make a comeback. I mean, they're obviously in the social media space, and the fact that they have, if you really think about the stock, I mean, look where it was earlier today. I mean, where was that Snap? I mean, I saw low of the day was 24.32. Right? And if you look at the history of the stock, I mean, that is pretty much almost the low of the year. Okay. That was like rock bottom. So if someone even had an opportunity today to have had this inclination that, this is social media stock, I think it's going to do well, or, they had a feeling this could be a comeback play and they bought the stock today, they're laughing away to the bank because they're doing so well. So I think that in comparison to where, Facebook, listen, we know Facebook offered to buy Snapchat. Okay. And Evan Spiegel said no. And why did he say no? Because he knows it's worth more money. Have they had a lot of challenges? They have. But it looks like they're definitely taking some serious action to turn the company around. Again, they're not in. They have no debts, and so that's really important already. And I think that he can take this company back to, maybe back. I'm hoping to see it back eventually to the 52-week highs in the coming, later this year. There is a possibility it can do that if he can start delivering, results like what he's doing right now. But we know Facebook wanted to buy him, and he said no. So he had the chance to say, you know what, no, here's my company. I'll take the cash. I'll retire for good. But he didn't want to, so he stayed in. He's still the CEO. He is a visionary. I really view Evan Spiegel as an Elon Musk of social media. So I think he's definitely going to take this company to new levels, and one to watch. Like if you guys are listening to the story and you like companies like Facebook, okay, then you should be really watching Snapchat because it is in the same space but at a much discounted price, and we know that it has the potential to do well. We've seen it perform, but I think this is just incredible news, and it's actually exciting for me because I'm actually going to have to watch this now and probably get back into the stock and look to invest back in because I don't have any more shares of the company.
Wow.
So I'm going to revisit I'm going to have to read the conference call transcript once it comes out, but I'm definitely going to be watching it even for tomorrow for a day trade. From an options perspective, probably trade it on a options play for a day trade. But I'm definitely going to look at Snapchat in terms of the actual stock and looking to revisit it. To have a starter position and looking to build on it for sure. After reading that news, that is quite encouraging actually, and quite inviting. Who wouldn't
Uh-huh.
want to invest in a company like that with that kind of news? I mean, I think that's incredible news.
The Musk of social media. That's some pretty big shoes to fill.
Yeah, Vegas, you're a beast with the knowledge you have in
That's a
analysis.
Well, you know what
Unbelievable.
it is? I was an investor of Snap, so I kind of know the company really well. So you know what they say when you invest in a company and you know the company, it's very easy to talk about it. So I mean, if I wasn't invested in the stock at one point when it was kind of like a little baby, then I wouldn't know. I wouldn't be able to say as much. But yeah, I'm gonna definitely have to take a look at this again. And congrats to anyone that has Snapchat from those lows. My gosh, amazing, amazing, amazing.
Unbelievable. Can I ask if you know anything about GoPro? GoPro was a VIP pick a couple months ago for like 2 weeks. Like we nailed it perfectly from like, I don't know, it was like $10 to $13. And now they just had earnings and after hours, and it looks like a freaking blowout. 30%
Oh my
increase
God,
in revenue.
GoPro? Do you
EPS
use
$2.27. $100 million
Wow.
buyback program. Cash and investments grew 64% to 539 million, and it's a tiny market cap, tiny PE. Any thoughts on that?
Well, do you use any products? I mean, I don't
Not
use
me.
GoPro. I mean, I
No.
don't use GoPro, but I know some people do. But they did say that they have a repurchase program, right, of up to 100 million, and they also did top the expectations, and they're planning to broaden their camera offerings in the year ahead. And so I did read that. And they also said that the revenue went up as well to 391 million from 358 million, which the analysts were anticipating actually 382 million. So the thing is how they're making a lot of their money too is from the GoPro.com revenue, which is their subscription revenue. And that's where they're making a lot of their money. They brought in like $16.8 million from their GoPro and Quick subscription offerings. So I think that is interesting because their strategic shift is definitely in the form of financial and operational improvements has helped. And that was one of the comments also made by their CFO, Brian McGee. So I think the fact that they have strong revenue growth, and also I love these words, when they put these in their press releases, but they talk about like significant margin improvement. Okay, that's really important to when you read these press releases, and also controlled spending, which will lead to profitability and obviously record cash flow generation. So these are things that, make you want to look at a company a little closer. So, definitely, I mean, from what I could see, it's looking good. I'd have to dig into it. You'd probably want to dig into it too, but it sounds like also the company is looking to increase their hardware offerings to have 4 distinct camera products by the end of this year, and that they anticipate that they're going to grow their offerings by the end of next year. And that, when I see a company authorize, their board is authorizing repurchase of shares and they're authorizing 100 million share buyback, that's a great sign. I love it. I love when companies do buybacks, because they're investing in their own company. It's great.
Wow. How did you prepare for this? I did not tell you we're talking about GoPro. When did you even have time to read that press release? Amazing.
I like to have research available at my fingertips.
Unbelievable, man. Thank you so much for that. Yeah,
You're
we did
welcome.
a lot of research on GoPro.
Yeah.
Last quarter, as I said, we had someone in our community really bullish on it. And I'm getting back into it in after hours as we speak. I sold it at like 12, getting back in at 8.89. Why not?
Well, yeah, absolutely. I mean, go and you know what? GoPro is pretty cheap too. Like, I don't think it's not a really expensive stock. So, I always like to find good bargains too, like stocks that you can get good position size, but also have the potential for the growth. So I think I'm gonna have to look into that one too, because haven't been following it for a while, but I'm definitely gonna take a closer look after seeing that information.
Sounds great. Did you want to talk about AMD?
You know what? Let's talk quickly about AMD because it's 5:15 and I know we don't have a lot of time left. So I do want to touch upon AMD and oh, hi Tony. I see Tony's here. So AMD, Lisa Su, oh my God, she's amazing. She's so smart. And remember, I don't know, do you guys remember when the stock was like $2? AMD was like
Yeah.
$2 a share.
Yep.
And, we know the 52-week high, like 164.46, and we know it's around, 123-ish right now as we speak. And the thing is that I think the stock is definitely not done. The 52-week high was 164.46, but I think that the stock is trading lower than what its valuation. We know that the stock has so much potential. And the thing is that the actual company had, again, record impressive fourth quarter results. And they had adjusted revenue of $4.83 billion, which was higher than the estimate of 4.53. And the thing is that they're growing the market share in the server and PC market against companies like Intel. And so it's going to give Intel obviously competition. And actually, I talked about Intel today in my room, because Intel, even to me, and that could be a separate conversation for another story event. But even Intel, I mean, we talked about dividends earlier with Apple. Like, Intel pays very good dividends, and for the dividend money that they actually pay out, the stock is underpriced. So going back to AMD though, they do have a strong focus and a strong forecast for the demand for chips that is used in the data center, and that's expected to grow. And the company has projected revenue of 21.5 billion, which was higher than the estimate of 19.27 billion dollars. So I think the company is still in the growth stage, has massive, massive potential to actually continue to report strong revenue, and I think it's going to enjoy very high market share in the coming years to come. So I think what's going to happen with AMD, they will be in a position that once the supply chain issues, I think, start to not become an issue with other companies, including AMD, they will be in a much better position to actually meet the demands of the users, which will give them a chance to also expand into the market. And I think that they have made significant updates to their GPU lineup that I heard, which is obviously used in gaming. Don't forget that they have taken away a large share of Intel, and its profitability is hitting lofty levels there. So, it's a great tech stock. I think the price is amazing. Can it pull? We know that there's days where the market's going to pull back. So yes, of course, if AMD has pullbacks, opportunity, to consider it for future longer term portfolio. I think the beauty of this company is that the stock, in my opinion, again, just my opinion, is undervalued, and that this is just the beginning of this company to become a growth, extremely high growth and demand. And I think that because of that, this will give the company a chance to, in the coming quarters, to actually exceed their 52-week highs. So we know it was 164.46. Will it beat it in 2022? In my opinion, yes. Will it happen? Remains to be seen. It's anyone's guess. I mean, it's either 50% right or 50% wrong. But for everything that I've read about the company and what they're doing and the amazing numbers that Lisa and her team have pulled off, I mean, to me, this is a no-brainer. I mean, if people love, people say, "Oh, I love Nvidia. I love Nvidia." Okay, well, do you love the price of Nvidia? And to me, a company like Nvidia is amazing too. But AMD is just as good. And I mean, you can get double the shares for half the price. So I like to look at companies that still have the room to grow, and AMD is one of those.
Great, awesome. Thank you for that analysis. Igal had to drop off a little bit earlier. He says
Okay,
goodbye.
bye,
What's your
Gal.
what's your schedule coming up? I hear you're taking a little break from Twitter for a bit.
Yeah, well, I think I'll be good for next week, and
Great.
then I'll be off probably the week after. So I have a few things to do, but yeah, we'll schedule something probably for next week. I think we're good for next week,
All right,
and
great.
then we'll go from there.
That sounds awesome. Coming up for
Yeah,
StoryTrade, by the way, if you're not following Vegas already, hit her profile, make sure you're following her. At StoryTrade, we got a couple things. We had 2 articles published on Benzinga today.
love it. What'd you guys talk
Yeah,
about?
one
About what?
on one was on Virtua VTSI, one of our
Yeah.
VIP picks. We summarized the whole story on our 4 pillars: fundamentals, catalyst, sentiment, and technicals. The other is Richardson Electronics, RELL. Really undervalued company that's growing, green energy sector. They're doing these new types of batteries for solar, wind farms, EVs, trying to get into solar. So these are 2 of my larger positions. Actually, one of the biggest shareholders of Virtua VTSI reached out to me after seeing our article hit the wires, and he wants to talk to us in our community. So we're going to host him next Wednesday at 4:30. This Sunday night, we'll be doing a VIP update on 2 stocks: Smith Microsystems, SMSI, as they gear up with their T-Mobile launch of all of their software services for T-Mobile, and also QC Copper and Gold. We'll be doing an update on that this Sunday night if you're part of the VIP community. Vegas, if you're interested in joining our Zoom events, yeah, we'll hook you up, and we'd be happy to see you there. You got Sunday night at 9 p.m. and Wednesdays at 4:30 p.m.
Sounds good. Sounds good.
Awesome. Thank you, everyone. Thank you, Vegas.
Thanks, everyone. Have a great night, and we'll share more stories next week. And let's see what the market does for us tomorrow.
All right, sounds good. We'll cut up these clips, put them on YouTube for everyone. Have a good night.